Good evening, everybody. David Shahady here. Happy Saturday evening. Hope we're all having an awesome Easter long weekend. I've been asked quite a lot lately, what do I think our property market's going to do given the current situation with COVID-19 and the current state of the economy? And what I wanted to do a quick video on is just to share some facts from the past and what the property market has done. What we did see back in 1991 when we did have a recession was in the couple years following that recession, we saw real estate have fantastic growth. Real estate led the way in the recovery of that recession, where we saw 8 out of 8 capital cities all grow. That ranged from seeing about 2% growth in Melbourne right up to Perth, which led the way with 27% growth. We also saw really good growth with some regional hubs as well. Townsville had 37% growth. Toowoomba saw 32% growth. If we go back to the most recent downturn we had in Australia, back in 2018 in the GFC, we also saw that great real estate led the way out of that downturn as well. We saw 8 out of 8 capital cities also show great growth following the GFC there. Darwin led the way with 32% growth. And that range started from Melbourne with 2%. So all the capital cities again saw great growth. Regional areas, Ballarat saw 19%, Bendigo saw 18%. Again, some fantastic growth off the back of the 2008 GFC in the real estate space as well. What we do have in Australia is a resilient financial system. And our economy is in a really good place right now to be able to see this downturn through and to be able to bounce back stronger than ever. What we have seen, which is going to be a massive help, is $90 billion in funds that's gone to the bank to be able to support lenders in helping people through this period as well. And we've already seen lenders pass this on through massive rate reductions, and being able to help with deferral of loans, etc. We're also in a space now where interest rates are the lowest they've ever been. If we go back to the 1991 recession, we saw rates there peak at around that 17-18%. Our rates at the moment, with the cash rate being so low, we're seeing lenders passing on rates of around about those 2-point-something% across the board, which is so low. With the current stimulus packages that we're seeing the government come to the party on to help us out, that's really going to soften the blow for us and see us through this period. I'm positive that real estate not only will survive through this period, but we will come back and bounce back and thrive. It has in the past, and there's no reason why it won't again. Guys, have an awesome rest of the weekend, and we'll see you all really soon. Cheers.